And so I total on the day, I made like, I think 7 or 8 grand on it, which is great, right? When I first started trading, I would dream making profit like this. So I'm 100% grateful for making this kind of money. But then when I asked myself, like, did I trade as well as I could have, right? Not looking for perfection, but just how this played out. Could I have traded it better? You know, were there mistakes that happened that really were avoidable? And on this particular play, that was 100% the case. So it's like when I do that, I just get this is what probably drives me to become a better trader, is to fix these mistakes, because it doesn't really matter at the end of the day how much money I made. It's like, did I trade well? And the reality was, yes, I traded okay, but there was just some key mistakes that if I had fixed, it would have been such a much better trade.
All right, everybody, welcome back to This Week in Steady Trade. We do not have Jack Kellogg with us again. The kid is like dying. He's got like mono and strep or whatever, not COVID. So send him some well wishes on Twitter. But we have Bryce Tuohey here. He's been on before, but he's also the host of Steady Trade Treats. If you don't know what that is, definitely go to StocksToTrade Instagram. The handle is just at StocksToTrade, and check it out. It's like an IGTV. They're like 3-5 minute long segments. He talks about the hottest stuff in the market, the hottest stocks, funny news. You know, it's good. It's just good content. It's funny, and it has to do with the stock market. So make sure you go check it out. Bryce, you have anything else to say about that? Did I miss anything?
No, you hit the nail on the head. Go check, and it's on YouTube too. StocksTrade YouTube. So check it out there too if you don't want to go on your phone.
Boom. All right, everyone. So yeah, let's just we'll give Bryce the floor here. So it's been like what, a month or two since you were on last? Maybe 2. It's been a while.
Probably about 2 months.
What have you been doing in those 2 months? How's your journey going?
It's absolutely crazy. Things have been going really well though. I think last time you had me on, I think I crossed 20K in profits, and however long it's been, today I actually just tapped 65K.
Whoa,
awesome.
Really sweet.
Really crazy. It was just last week when I put on Twitter that I crossed 50. It's weird how exponential growth happens in a hot market.
Mm-hmm. Yeah, that's for sure. Are you what are you trading nowadays?
Everything. I trade. I've been, a lot of the past week or two has been OTCs because they've just been so hot. OTC breakouts, a couple of OT like shorts here, but I'm waiting more for the first red days to come on some of these really hot runners. And then, a couple listed breakouts because those have been pretty hot too. Not a lot of the day ones, and also like listed bounce plays, just stocks that have been pretty beaten down on the daily. When they put out that PR, they can really, really soar. So I'd say those have been my OTC breakouts, listed breakouts, and listed bounce.
Awesome.
Yeah.
What about you, Kyle? Any updates on your last week?
Yeah. So I remember back in, we've had a few episodes where we talk about the OTC market is hot, and I specifically remember my best month of the year, July, being also very hot OTC wise, because it just seemed, easy is not the word I want to use because trading is never easy, but in terms of how smooth I would say it was in July, in terms of for me to get to that big of a month of like $80,000 was pretty sweet, and it was pretty easy going. But this month, the OTC market is even hotter. I would say this is probably the hottest OTC market I've ever traded. That's maybe not a sector. Maybe back in 2017, before I even had like a good understanding of what short selling was, when the weed run was hot, with like cans and buds and NUGS, that was probably hotter back then. But in terms of a non-sector, just how many plays there are in the OTC market, I would argue this is probably the hottest market I've traded. And I'm already and it's already been 8 days of December, 8 or 9 days, and I'm already above July's profits. So if I keep trading well, this will probably be my first 6-figure month. Just gonna take it one trade at a time. That doesn't mean anything. Like, there's still 2.5 weeks left of December, but yeah, there's a OTC runner or OTC dip buy or OTC breakout like every single day, and they all have. The great part about it is why it's so hot is they all have massive volume. Like, it's one thing if they're just like too illiquid for me to trade, but almost all of them are tradable, and all of them are available to take size on. So it's just impressive and it's amazing. So I'm going to take full advantage while it's here.
Yeah, well said. I completely agree. I didn't trade the 2017, like just those crazy weed runners. There's definitely not currently like really a super hot sector. I think a couple are setting up. If like, because if I recall correctly, like a lot of the hot sectors in the past have started out with like a slight run and then they consolidate for like a month. And then when they like re-break out after that first run, that's like when stuff gets really crazy. So there's a couple sectors out there that are like kind of trying to do that. None of them's like proving that I see currently to actually just go completely bananas. But there are just, like you said, there's OTC stocks that are hot. Like there's a dip buy, there's a breakout, there's some type of short like out there almost every single day. Definitely the hottest OTC market of 2020. Like listed was super hot in the beginning of the year, and OTC had some plays, but like right now OTC, it's just the thing. Like you said, there's volumes there. There's a lot of new traders, I think, in the market, and we're coming up on the holidays. We'll probably have another episode or two before like Christmas and New Year's, but December and then like January, February, like statistically hottest time for like the OTC market and just like penny stocks in general. So at this moment, it's setting up to be really like volatile. Like you gotta be focused, and I'm not like guaranteeing I'm going to make money because it all goes down to how much you're going to focus on these plays. But setting up that there's going to be opportunity out there, and I'm pretty excited about that. Yeah, update for me. I don't really know. I'm up a lot this month. I'm having a pretty good month. I don't actually know specific figures, but it's just I've been focusing on the OTCs day in and day out, and yeah, when like for me, I like had like kind of a weird October. I think I wasn't like super focused just because I was like moving and a bunch of stuff. So like I got like lackluster with like tracking my trades and doing my watch list. And like a big thing for me the last like 2-3 weeks is I like went back, track every single trade again, making those watch lists at night again. Super important just to be prepared so then I can be focused the next day. And it's honestly just like a night and day difference. So that's that.
Did you cross 500K this week, or was that just?
I was either Monday or last Friday. I did. I updated it all on Profitly, but it's a little behind because I think it's like 24 or 48 hours that trades have to like settle before Profitly will update them. And I've had a couple good days this week. So yeah, I mean, it was in December. Very recently, I crossed 500K, which is absolutely bananas to me.
Yeah.
Thanks.
Congrats, dude. Sweet.
No, it's crazy. And like, I mean, I don't know. It's just surreal. Because like a year ago, and Kyle can attest to this, like it was a couple months ago, like 14 months ago, I guess.
Yeah.
Like I was at the conference and I was like barely a profitable trader. So like 2020 is just like, if you work hard, anything is possible. And I'm sure there's people out there in the market who just aren't public that are doing like much, much better than me. I'm just like pretty transparent about it, but like you work hard, you put your head down, anything can happen.
Yep.
So with all that being said, Chartmaster Kyle,
Let's do it.
Mr. Bryce Tuohey, you want to do your soul trade?
Yeah, sure. This is probably one of my favorite trades of all time. I don't know. I think I just executed really well on it. It was the day of the breakout over, what's that price level? Is that
Is it at 8:30 here, or this breakout right here of 570?
The second one, the all-time high breakout there, or whatever.
Yep.
The yearly breakout. So what you can't see is pre-market how well they. I believe they held it up really well pre-market, and I think that's why just when it was opening up green, for me that was a big sign. Just seeing how well they recovered it on the second day, right in there. Mm-hmm. After that dip, I thought it was over, and by the time they recovered it end of day, I was like, all right, this has to definitely be on watch for tomorrow for a breakout. And when they held it up pretty decently in the pre-market, I got long, I think 2,000 shares right out of the open, and had a high sell. My highest sell there was actually the top of that first push at like 9:10, 9:15, 9:10. It was right around 9:10, and I think I kept about 500 shares as it came back down. And once it started consolidating again, I started loading up in that 870, 880 area, and then sold right into the 930 push. And that was my last trade on it. It started looking a little bit weaker up there, and the volume just wasn't coming in like I kind of wanted it to if it was going to go to 10. But yeah, I think I locked in at the time. That was my biggest trade for about $1,600 or $1,700 just by the way I was scaling. I guess I didn't go in I went in with 1,000 shares the first time, then not 2,000. But yeah, I was really happy with how I traded it. And just, again, listed breakout. You know what I mean? They don't always close strong, clearly, as this one shows. But
yeah, I've noticed that. I think it was Gertani who tweeted out maybe like months ago. Like, I unfortunately don't have the time frame of when he tweeted it out, but he actually posted like stats on that he's been tracking with listed breakouts. And the point of the tweet was like that they don't work. And it's not that they don't work. I think it's that, like Bryce said, like, you can trade the breakout, but maybe being patient on them is not the move. Because right, I mean, you could have totally been like, yeah, it's a breakout, and then by the end of the day, if you're like trying to swing trade this thing, like you're down, and the very next day you're down even more. Like, it would have been a huge loss trying to sell into this panic. So I think that's probably the best lesson I would take away. Like, I don't trade listed breakouts; I'm terrible at them. But after seeing what market we're in and just kind of the overall consensus from people I follow, it's like, yeah, trade the breakout, but do not be, I would say, convicted or overstaying for sure.
And one thing too to definitely notice is if you go zoom out a little bit, the day that it ran up to whatever that was in the 9s the first time, that volume was so much stronger in comparison to the day that it kept trying to run, and that was definitely something big to account for. And again, like you said, you can't be too patient on them. Sometimes they work, and other times it's just, to me, it's worth it to lock in the profits.
Yeah, good call.
Agreed. Good trade.
Thank you.
All right.
Next one?
Yeah, and then FORW was my new biggest trade of all time. I think I locked in 2,300 on it. I don't even remember what the start to my entry was, but I held that. So I got in right in the beginning of the day on the first breakout. So basically, yeah, right in here. I got in right out of the open with pretty small size, and was essentially just kind of waiting for it to set in a low. But then when it started building this base in here, I just kept adding in the 8s, the 10s, and then eventually I slapped full size at that last area of consolidation before it went into the 17s, I think. Right in there. Yeah, right there. And then just kept selling out on the way up. I think my highest sell there was 16.8.
Oh, nice.
That's
yeah, right. That was that last. I actually sold right before I consolidated. I was like, all right, that was everything I needed out of it. And yeah, it's crazy. I think that's why OTCs are so awesome when they're hot. And I never really used to realize it, but they might be a little bit slower movers. But I mean, when it's a 13, 14 cent stock that can go up a couple pennies, you can get pretty tight risk on them. Yeah, you might risk a little bit of slippage, but for the most part, you can get some really volatile moves and at pretty predictable times. That was the end of the day run. I contemplated getting back in and swing. I'm glad I didn't. I just don't know enough about swing OTCs, but yeah, they're really awesome opportunities. And again, daily chart breakout by the end of the day. So
Kyle, could you pull up change it to 15-minute, like 15-day, 15-minute?
Yep.
Yeah, so I took a very similar trade on this to Bryce, and I alerted it in the small cap rockets room, but I got a couple questions because people were asking me, like, because OTCs trade differently than listed. They're slower. And this one especially, like, sometimes the spread got a little weird because midday the volume wasn't the best. So if you're just looking at like a 1 day, 1 minute of the 7th, December 7th, which is the breakout day, like the chart doesn't look anything special. But when you zoom out to this 15-day period, you can see that like the first run was towards the end of November, where it went from like a penny to like 12 cents. And then for 7 days, basically, it went sideways. And you have to take all that into consideration, because when it can hold the vast majority of the spike, right? Like, so it spiked from 1 cent to 12 cents and it's holding around 8. Like, that's a very strong indicator that we might have a follow through run. And like, this one didn't go like multiple days, but it's holding up again. So like, I'm still watching it. I'm not super eager to get in because it did fail to break out the first time, but it's still worth watching just because it's holding up. But for me, the trigger on the 7th, the reason the 7th I started buying it so early in the day, right around the same price was the 8 cent level, and even like 8.5 cents. I'm trying to guesstimate. Yeah, right there, that level that Kyle just showed, became like almost like a mini breakout. Like, it's just like, it's clearly a key trigger point on the chart. So once it broke above that, I started in small size. And when you do that, especially in the OTC market, you can like size into these more or less on liquid plays, and just like, by the time it started breaking out at the end of the day, like, worst case scenario for me, this was going to be a break even trade. And it ended up parabolicing from my average, which was in like right around 10 by the time the end of the day went, all the way up to basically 17 cents. So that's like a 70% like return, which is absolutely crazy. My best sell on it was like 15 cents. So, but like, still, even on that best sell, that's like 50%. And my risk was essentially 0. And that's just why OTCs are so powerful, especially when you look at these longer term time frames and you size into the plays correctly. Yeah, like, they're super powerful and they're super hot right now. So it's like a really good way for a lot of people to grow a small account. That's how a lot of the big traders you see on Twitter, like, most of the time they get started in the OTC market just because the risk reward opportunities are so much greater.
Yeah, I agree. One thing I do with I like that you brought up bringing up the 15-minute chart, because it's not an exact science. Like, I don't necessarily always look at the 5 or the 15 or the 30 or whatever, but I do sometimes looking at a larger minute time frame, and then like a 10 to 15 day, because for me, I like looking at not just for long trades, but for short trades, looking at certain channels that wouldn't necessarily be a traditional channel. But if you look at this chart right here, you can see, okay, on a 15-minute chart, like 6.5 is clearly a good support level, but then there's clearly like a little top here at like 7.5, and then you see that all of a sudden becomes a bottom right on this channel. Then you see the same thing here. You see even before it got set, 7.5 was also a bottom earlier. So then you start seeing these like I think of people sometimes call like lines in the sand. You start to see these little areas of importance. Like Matt said, like this $8 or this $9.09 level was a level. You have a top here at 11 cents, another top here at 11 cents, and now like Matt said, it's holding here and actually held like just over 12 cents here. So it's like you kind of see these lines of support resistance that you necessarily wouldn't see with a 1-minute chart. But as you start to kind of condense those candles into 15 minutes, you can kind of start seeing clearly the levels you may want to play off of that are a little more meaningful to the chart. So that's what I look for, because that really helps me set certain and have conviction in certain levels and certain areas I want to risk off of or enter, that kind of thing.
Exactly. Well said.
Yeah. TSNP. I think me and Matt did go over this last week, not last month, but this is a ticker, at least for me, me and Matt were talking about this before the episode we started, and some of us love this ticker, some of us don't. But for me, this is one of those tickers that, like, I don't want to say the ATM, like at an ATM machine, but just for me, as much as I like panic dip buys and to have a stock this liquid, I've really grown to like it. Because like I said last week, how if you watch that episode, I talked about how I was really bad here, got better on this dip buy, and then pretty much nailed this dip buy. Well, then after like this evolution of me getting better with this stock on its dip buys, this entire week, I think I've made money on it every day so far. Like this day, I bought this dip, when I held the open price, and then sold into this $30 or 30 cent spike. I then bought it again on this day, and I think I did really well. Bought it at 26, like stayed really patient, sold at 30. Again today, I only got partially filled on it today, but I did have a really good entry at 23, and then sold it at 25. So like just really, really getting a hang of this how this OTC moves, and if it as long as it panics every day, like I'm probably gonna dip buy it. So we'll see what it does in the future days. They do have a conference call probably right around now, and after hours. If you want to listen, I have no idea where the link is, but I know there is a link somewhere you can listen to. So we'll see what happens tomorrow. But yeah, it's been such a liquid OTC that panics a lot, and so I've been there pretty much almost every time to dip by it.
It wasn't clear Kyle's the one who loves the ticker, and
Yeah.
that's not just a big fan. I just haven't gotten quite the hang of it. I'm either too patient or not patient enough, and it is like once you learn the stock, I think one of our very, very first episodes of Twist was like called "Learning a Stock's Personality" or something like that, and that's essentially what Kyle did here and is talking about. Like once you just understand how it trades, the players in it, like you can take advantage of that. And I'm just singing a different tune here, I guess, with TSMP, and I just haven't quite like overall I'm profitable on it, but day in and day out, like it's not the easiest thing to trade, and now it's just holding up. And I kind of knew it would be holding up until this news conference that Kyle mentioned is happening right now. And tomorrow's gonna be really interesting because like if this is like buy the rumor, sell the news event, like we could see a really big panic tomorrow. So I'm totally gonna be prepared for that. But if for some reason this news is like extremely, extremely good, like this absolutely could go on another run because it's been holding up for a couple of days. So yeah, so I was never going to hold this stock, and I hope like no one is ever really going to gamble because basically this is more or less like earnings. Like everyone tells you not to hold through earnings, well, like just don't hold through any like news event. So
Right.
I'm going to react to whatever it does tomorrow morning, and we'll just go from there. And hopefully we'll be singing the same tune tomorrow.
Yep. Yep. Next one of my trades was HTZ. This is a very, I would say, good lesson, but also a counterintuitive lesson. So again, this is an OTC runner, really, and almost like I call these like a grinder, where a lot of typical supernova runners only have like 3 or 4 or 5 green days where it's like straight up. Where this one had, almost, I think it's like 7 or 8 green days, but every green day was smaller kind of thing. So it's a little more of a grind until it got to the last 2 days where it really became more of a runner and really extended itself. And so coming into yesterday, I knew, if it going red would probably take it much further down. Only problem was that it went red, and then and you see it here. It went right out the open, but the spread was actually much wider than I had anticipated. I call these, like a lot of traders call these, like air pockets, like where you think you might get short, all of a sudden you want to get short there, and the bid immediately moves down like 2 or 3 cents. Like there was no bidders where you thought you could get short into. And so unfortunately that led me to like chasing a little bit. And now I had an average about a few cents below where I wanted. And then the next thing I know is that it's holding and it's coming back green. And so this happens. This is not, again, shorting red green is not a foolproof thing on OTCs. Like any one of them can come back. And so it did. And so when it came back green, I had to cut it. I took like a $1,200 loss. And I left it alone. I said, okay, if it's really going to be weak, it'll come back red. And it did that. So then when it came back red, I reshorted, and again, it was like almost like the same air pocket kept appearing. And so that got me all flustered, and I ended up having the same average reshorting. So it's like, for as much size as I was taking, I mean, I was trying to short like 20 to 30,000 shares. So a 3 to 4 cent difference in your average, like that's $600, $700, $800, and so I was getting very kind of frustrated the fact that I just was not being patient with my entries and really letting this air pocket or this spread kind of get to me. And so fortunately we did end up dying, but I just didn't feel good about it, right? Because of what I just said previously. And then this had a lot of fake out turns on the way down. So I ended up covering most by like 210. And then next thing you know, I see it in the 280s. So it's like really frustrating for that. But I mean, that happens as well. And so I made I think another 1,000 or 2 reshorting this bounce and covering into these dips here. And so I total on the day, I made like, I think 7 or 8 grand on it, which is great, right? When I first started trading, I would dream making profit like this. So I'm 100% grateful for making this kind of money. But then when I asked myself, like, did I trade as well as I could have, right? Not looking for perfection, but just how this played out. Could I have traded better? Were there mistakes that happened that really were avoidable? And on this particular play, that was 100% the case. So it's like when I do that, I just get this is what probably drives me to become a better trader, is to fix these mistakes, because it doesn't really matter at the end of the day how much money I made. It's like, did I trade well? And the reality was, yes, I traded okay, but there was just some key mistakes that if I had fixed, it would have been such a much better trade. And ultimately, over the long run, trading better and trading well leads to more money in the long run, right? If I had traded better and I traded like this ticker like less poorly, you know, I probably would have made over 10 grand on HGZ. So again, it's not, again, the money isn't really the issue, but it's just trading well leads to more money in the long run. So trading well is the priority. And so I get really disappointed and frustrated when I do that. And unfortunately I did the same thing again today, right? I literally, I shorted again out the open for a second red day. I ended up covering some of the 180s and then got caught in this little second bounce. I covered it all over VWAP at 190. And then you see it collapse 30 more cents. So when our risk level was like $2 or $2.05 morning high, but I just kind of stopped out because I thought it was over. Or I thought I didn't want to give back any more profits, which isn't trading well. I should be sticking to like the best possible trade plan, which would have been, sticking to a $2 risk level. But again, so I guess I'm leaving money on the table again, but it's like, that's really relevant. It's like following your trade plan, following your rules, and really minimizing on those mistakes. What really matters. And I just didn't do that on this ticker. So even though I made money, this ticker got me very frustrated yesterday and today. So
Hertz was tough.
It was.
Yeah.
It was a really tough mover. Because like you said, it gets so grindy. And then when it acts weird even when it's got the big moves.
Yep. Yeah, same thing for like dip buyers, right? I didn't dip buy this one.
Yeah.
And I'm kind of thankful I didn't, because there was like 3 fake outs and just this panic alone. And then there was like 3 more fake outs today on this panic alone. So it's like, it's for longs and shorts, the way it moves, it's just very much more difficult to trade for sure. So at the same time, I can't beat myself up too much. I did make money on it, but just the way it moves, these little inefficiencies about it, again, like the characteristic of this stock, it's just slightly different enough to kind of throw me off. And then it gets me, trading, poor, more, or not as good as I should. So.
No, I agree. I'll third that. Hertz was a tricky one. That's for sure.
Yeah.
All right, Mr. Tuohey.
You want to talk about this massive run today?
What do you have to say about this ticker? What do you think of it?
Oh, that was the most degenerate trade I've taken in a while. But I had a plan going into it. This was just one of the craziest. This is probably on low volume, given the float. What the float was like 1 million. Given that this is probably the craziest low float runner I've seen in 2020, but it just didn't have that much volume. So I don't think it was like that. Because when Kodak ran, right? I mean, that was a liquid. It went from 2 to what did it go to 160?
It went to 60.
Okay, yeah.
Kodak went to 60, yeah.
Oh, 60. Okay. It was very liquid though. This one wasn't, but when I saw it skipping up through 100, I was like, I'm gonna dabble in this. And I'm literally just gonna risk 200 because I've never seen a stock go to 200 before. So I took 30 shares short at like a 130 average. And I tried to get an ad in at 159 and it hit 158, unfortunately, but I got all my covers off. It had that nice big red candle, which left me a little more confident. I think that's one thing to notice too. I mean, these definitely aren't these are not ones that are safe to short in any regard, let alone with size. But generally when they have that first, big red candle after the gaps up, they do fall. Unfortunately, it had a really nice fake out. Where was that? Like that 110? Yeah, that first one, it had a nice red candle. And that's when I got a little bit scared, but I got in my short in at the next red candle and covered up around $45 a share. I had covered 5 shares at 90 and the other 25 down at 45. That was
nice.
I think I locked in about 20. That actually might tie my next, but I had borrow fees too. I mean, I paid $500 to short it, so I guess I made about $1,700 on it. Yeah, it was. I wish you could reserve with my broker. You can only reserve in 100 share increments, and I'm not shorting 100 shares of this. But I figured if my plan worked, it would easily cover the borrows. It did, but this was for sure the craziest runner I've seen in a while. Well, it was because of anyone know what the news was? It was.
I don't.
I know it was cancer. It was cancer, something cancer related, but clearly that's just a short squeeze and a half right there. I mean, that's not. Those aren't buyers that high, I can tell you that.
And if you go and look at just like all the short squeezes, right? Like, I mean, shorting a short squeeze is dangerous just inherently, but like the way you approached it is like as safe as you could be, I would argue, because if you like the way you were describing it and you were patient when you entered and you weren't in like an add mentality, like that's how you blow up. But if you look at all these short squeezes, whether it's Kodak or Dries or just like any short squeeze you find, like they all end the same way. It's just you have to time it right, which is where the difficulty lies, is just being able to time the top. And I mean, yeah, you did a fairly good job of that, and you made like what, $90 a share? That's absurd.
That was nuts.
Right.
Yeah, that's like you said too. You have to. It's a really weird concept because you have to be extremely patient. But when that second comes, that you're like, all right, this is the entry. You have to be ready for it, just because those halts when they open up and those candles you see up at 120, 140, those candles last for like 1 or 2 seconds, and if you're not in.
Quick.
You miss the move. And, for me, that's like I'm wasting a $600 or $500, $600 borrow, whatever it came out to be. Now, I'm not saying that's a reason you should just enter a trade, but you got to be really quick and patient at the same time. Definitely not something to, like you said, it's extremely risky.
Yeah, I like the way you went about it, Bryce, because that's like, I agree with Matt. That's probably the safest way you could have gone about it. Because think about the math, guys. Like 30 shares, Bryce, was your size?
Yeah.
I like what was your average again? We said 130.
It was somewhere in the 120s, 130s. I didn't actually. It was right at the end of the day.
So what is that? Like, yeah, it's like a $4,000 position. Which again, to some traders, that's a lot, right? That's if your account is only $4,000. Yeah, you shouldn't probably be trading this at all. But like you said, Bryce crossed 50K. He's got a big enough account now where it's like taking that small of a size is still, again, it's into a short squeeze and it's into a massive low float short squeeze like this, which is scary in and of itself. But when you do it, at least recognize that it is scary, like we all have, and taking that small of a size is the safest way to go about it, right? I've said it a few times. I've heard multiple other traders say that you shouldn't even trade stickers like this. But if you want to, and you have borrows and you see the pattern, which again, that they all end the same. It's about timing them. Same with me. I probably wouldn't have taken. I didn't have any borrows of this stock, but even if I did, I probably wouldn't have taken over 100 shares. And 100 shares again at 130 is $30,000. That's like barely 5% of my biggest trading account. Versus other traders who will literally just add, and before you know it, they're like in half of their whole account in this thing, and then it runs. It could have kept going. It could have gone from 140 to 180, and they're out of their account. Whereas Bryce, even with a small position, he was risking $200. He's already risking a very wide stop by the fact that it's already gone up from 40 to 140. So again, that's just the best way to play it, even though playing it is already risky enough. But if you do, right, like I said, Rice's plan was probably the best odds chance of being right and still being safe in the process. So
for sure. I think the hardest thing is there's like no solid risk level for that. You know what I mean? Like when you're going over Hertz and you wanted that $2 risk, that's very clear. It's so hard on something like that. You know what I mean? That's 200 is just an arbitrary number, and I've never seen a low float squeeze over 200 from 5. So it's like, if that happens, it could go to 1,000. I don't know.
Right. Yep, I agree.
Absolutely.
Another play for me that I'm watching, I think we're all watching, is MMEDF. Like I said with Hertz, how it's more of a grinder where it's kind of gone out multiple days, and we look for more bigger supernova runs. This is certainly the case where, it is a slower supernova mover, but in 5 days, we've now gone from 150 nearly to $3. And already from pretty much, we're also up from $1 with only a few red days in between here. So for me as a short seller, like, yeah, first red is coming for you dip buyers out there. I might even dip buy this stock as well. A good panic dip buy might come. So I'll be watching this for the coming, maybe likely tomorrow and or Friday, but I think the red day is coming. It's near.
So I made a study trade treats video about this ticker, and I got shit on for it. Like, I was like, guys, this is literally just an overhyped thing because it's a mind medicine company. It's a psychedelics company.
Yeah.
Right?
That one was funny.
Yeah, and in the comments, people are like, no, acid is the way of the future. I was like, we can't even legalize a weed in this country yet, and you're trying to tell me that MMEDF is the next hottest thing ever. Oh, it's classic.
But that's the problem though. Like we can close on this note, but like people fall in love with the story, right? And it's okay if it's a real company. I'm talking like Google, like Facebook, like Amazon, like fall in love with the story, like it's a legit company. Like if it's trading on the OTC market, or it's like just some market cap, like $50 million market cap company, like don't fall in love with the story. Like it's a penny stock for a reason. It's, odds are it's total crap. Like, yeah, this went on a sweet run, and if you believe the story, you're probably up a ton of money, but you're also probably going to hold it the whole way down, and then you're just going to be break even or lose, like a loser on the trade. So like the way we all treat them, if it's not clear, is like they're trading vehicles. We're just like trading the volatility, and like the news might matter, but we don't care about like the long-term story. That's just not the point of what anyone's trying to accomplish here.
100%.
I like that you say that, because I know people who they aren't traders, but they will quote unquote invest in some of these stocks that we trade. And right, if you talk to them, they are dedicated to the story, right? They research the companies, and all the research that doesn't matter, right? They don't look at this, they don't look at the 10Q, they don't look at the earnings, they just look at all these rumors and these hype articles, like, and they fall in love, dude. And I think an ongoing term I've heard from multiple traders and throughout the community is that the goal in the trading, or even in making money in the stock market, isn't about being right or wrong. It's just about making money. You don't have to be right to make money, and you don't have to be wrong to lose money. And the problem is with believing these stories is that you're looking to be right. Like, you want to be like the early investor who was right in this company and believe this story. It's like, none of that matters. None of that matters, right? It's like they're vehicles. It doesn't matter if you're right or wrong. Just trade it the way it's moving. So I think it's a perfect example. Like, I just don't care what MME EDF does. All I know is how it's moving, what its price action is. And I don't care if it ends up being right, the next best, psychedelic company in the world, or it goes to zero in a year. I don't care. Like, I'm just here for the action, for the vehicle that it is. And that's all it is to me.
Well, and one last thing too, it's scary because in 2020, these stories, like they work for like a week. And so you get these people believing it because you get the stock. I mean, MMEDF was at 25 cents like a month and a half ago, and now it's near 3. It's like you get people that actually believe it because, like, well, it's been working, and they all have the same story after the real bad first red day. It's 2020's crazy.
They realize stocks don't only go up after that.
2021 stocks might go down. We'll see.
We'll see.
All right. Well said, boys. Bryce, thanks for coming on. And again, I'll mention Steady Trade Treats again. It's on Instagram. It's also on YouTube. You're probably watching this on YouTube, so just go peep a video. They're like 3-5 minutes long. They're funny. The MMDF one is honestly, I think, hysterical. So, so make sure you guys go check it out. If you're new, like, subscribe, and we do this every week. So catch you guys next week.
Thanks for having me on, guys.
Yep.
Bye. Cheers.